Let's broaden out our perspective with Peter McGuire. He is joining us from XM Live via Skype. Pete, good morning to you, almost afternoon. Big night in the US, particularly with the S&P 500 briefly touching that record all-time high. It appears as if it doesn't matter if there's an election, it doesn't matter if Congress is yet to come to a deal. I know you've been scratching your head over it for quite some time, but you know, equities it seems are here to stay.
You betcha. Good morning, Nadine. Good morning, David. Yeah, they're booming. And, a couple of quick points. First off, we've got double the horsepower or firepower that the government's thrown at this compared to what we saw with the Lehman crash. So that just gives you a headline as far as what's prepared to be absorbed by the market. The other side, of course, is that we've never seen this in 75 years, since really the end of World War II, that sort of stimulus measure. So as we roll into the end of 21, I think it's got to be onward and upward for equities. You've got practically zero interest rates across the globe. You've got huge stimulus. And the other side, I listened to Professor Jeremy Siegel this morning, and he was discussing a very interesting point, how companies are becoming leaner, yet producing more. So sure, it's from an unemployment standpoint, it's going to be quite dire leading into 21 and 22. But from a company earnings perspective, they're performing very well, and 21 could be a boomer again.
People whip around the grounds in a second. I'll just get your thoughts on the jobs report that's coming out, though, in about 5 minutes' time. What do you make of this data? Obviously, it's important, but it's also very dated in the scheme of things. Do you think it'll have much of a lasting impact on what we'll see?
Maybe for a couple of hours, David, but that'll be about it. We understand how bleak it is. I think every family and every company in Australia is very conscious of it. So, yes, you absorb it, and data is, it's got to be dramatic to actually take an impact to the market. So for a couple of hours, we'll be scratching our heads and going, yeah, well, that's the number. And probably what's more important is where are we in September, October or November? So, it's just a little bit of a reflection point, but nothing really to dwell too much on.
Okay, so talk to us about the commodities complex, Pete, what you're watching. We saw oil doing really well through the overnight. U.S. crude inventories falling by 4.5 million barrels in the past week. At the same time, Saudi's Aramco is planning to slash its capex in 2021. No big surprise there. So where to from here?
I still believe, to get a breakout either side of 45 and 40 on the downside, I'm still waiting for something to happen. I'm still waiting to see something as far as a positive tone to get a feel whether I want to be in this market. At the moment, I think it's range bound, Nadine. Like it or not, that's not where the fast money is. There's nothing to be made unless you're doing option strategies. But at the moment, very, very range bound, 45 to 40, WTI and Brent. I'm waiting for either a geopolitical concern, maybe a hurricane, or something to change framework to make it an attractive trade. So at the moment, I think it's just something to look at, but not to be really involved in.
Yeah, Pete, where are people making some good money right now when they're trading?
Short gold.
Short answer.
You bet. That's where the smart money was. I was waiting for that one. So when you're seeing it was at 20.89 this time last week, or maybe even Friday, it got spanked down the best part of $200 to about 18.80. Now you've had the next part, of course. You've got that Treasury yield is starting to creep up a little bit. You've also had an increase in margin from the CME for COMEX futures. So in raw terms, for a silver futures contract, it's about 15% more margin. And for gold, I think it's about 7% up. So you've got to actually, from an investment standpoint, pay more. The second side is that it was terribly overbought, Nadine. So you saw that huge crunch to the downside. US dollar took a little bit of a rebound to the upside, and equities, stampeded. So it was fast money taken out of the market, maybe some margin calls, but I think gold's on a trajectory back up.
Pete, does that go and extend to silver? Obviously, it's been behaving like a bit of a high beta play to what's been going on with the spot gold price. It got crunched yesterday. I think it was down 15% or so. Is there upside for that as well? The volatile conditions we're seeing going to continue?
Absolutely, David. Volatility is here to stay in that segment. And realistically, any market that's moved so dramatically, when it was crunched in mid-March, I think it got down just on $12 an ounce. Then it hit 18. So that was a very, very short move, and now it's all the way screaming ahead. So it's had such a huge uptick that naturally any market that's parabolic, exhaustion comes to the upward momentum. and it's sold off dramatically, and then it stabilizes, then it goes again. So at the present time, I think it's not a bad market to be holding, and certainly one to keep an eye on from industrial demand, and more importantly, it'll outstrip gold, its bigger brother, in growth.
Okay, so Pete, we are keeping an eye on the Aussie, trained there because we've got this jobs report out in 1 minute's time. But the US dollar, talk to us about where the US is sitting. Most major currencies were weaker against the US dollar overnight, so it's seeing a bit of a renaissance at this time. But where again is it headed?
Well, it's still around that 93 to 94 mark. I can't see any breakouts either side at the moment, Nadine. We were crunched last week at 92.5. This is US dollar index for the viewers. And remembering that within the last, was at 103. So it's had a big fall to the downside over those last, say, 4 to 5 months. I think it's, until we see something dramatic happen, I think it's going to be a 90 trade. So there's further weakness as far as that US dollar in the probably short to medium term leading up to Christmas. So it's not you've got to look at it from a trading perspective. It's got to be the first thing you look at in your morning. Where is the US dollar index? Then where are equities? And then gold and so on. That's how I run my day. I only look at one number, and that's US dollar index to start with.
Well, tricks of the trade from Peter McGuire there. XM, we always appreciate your time. Thanks so much, Pete. Speak soon.